Hey guys, Reese here and welcome back to my channel. The way people think about retirement is changing and has been changing for a few years now. And I think my generation specifically is thinking more and more about how to retire early and achieve that freedom in their life. They don't want to work till 65 and then enjoy the last maybe 10 to 20 years of their life. They prefer, like probably everybody would, to retire at say 35 to 45 and get the last, 40 years of their life to themselves to do whatever they want and maybe pursue another passion. And the old way of saving and investing for retirement just doesn't really allow for you to retire early. That age-old way to save up a lump sum of money and put it into a tax-deferred retirement account like a 401k and an IRA, and maybe you have a small little pension on the side, which is being phased out anyway. That's very hard to save up a large amount of money to be able to draw from for 20 years to fund your retirement. And when you have to save up a lump sum of money for retirement, that means you probably have to work around 40 years, like most people do, in order to save up enough money to retire on. And so in today's video, I want to show you all how usually you can retire in 10 years or less with real estate. So guys, if that sounds good to you, I'd love to have you like this video and go ahead and subscribe to the channel. I'd love to see you back here in future videos. I would really appreciate it. Helps me out a lot. And with that said, let's get right into the video. Now let's first address a little elephant in the room here. As I watch myself recording this video right now, I notice I have no idea what to do with my hands. So normally my hands are like below the screen, but I'm in a different recording location in my office, and my hands are part of the YouTube video today. So if I look a little bit awkward because I'm over here, moving my hands around and it doesn't correlate at all to what I'm saying, forgive me. I'm not really used to having my hands in the video, so anyway, let's move on. Now, anyway, if you want to be a baller and buy Lambos and be going out to dinner every night, going on lavish vacations, then maybe a 10-year retirement is a little bit of a stretch. It might still be able to be done. However, this video is to cover more of how do you cover your expenses plus a little, allowing you to retire super early and then maybe pursue a passion or another business idea or something that will allow you to make more money. Or you could just retire on the beach with a $3,000 per month income or something like that, small, that will cover you in retirement. However, if you want that baller lifestyle, the Lambo money, you're gonna have to work a little harder probably, maybe a little longer, or just work smarter and make real estate into a full-time job instead of this is planning that you're gonna do this part-time and do it while you're working another job. However, the cool thing is that in order to retire, you don't need to save a lump sum of money in a retirement account. You just need to be able to fund your lifestyle after you quit working your day job, which means build a passive income stream that's over your monthly expenses, as well as maybe a little bit of a buffer and money that will pay for taxes that you obviously have to pay. And so the clear first step to retiring early is to track and determine your average expenses. This is such an important first step, and I know it's pretty basic, but there's a large percentage of people that have no idea what they spend in a month. They might have a ballpark that's less than $2,000, less than $3,000, but no real idea on how much they spend on average. And so I'd recommend first, if you haven't already, set up a Mint or a personal capital account, which you can link your bank accounts to, your credit cards, debit cards, whatever, and it'll automatically track your expenses and you can build a budget based off that. And I'd say do this for a couple of months because you may have one really cheap month, one really high month, and give it 3-4 months and average these together, and that'll be your average monthly expenses that you need to cover with passive income. And of course, out of these expenses, you have your absolute necessities, and then you have your kind of wants over here. And so it's important to break these down because if you have the goal to retire as soon as possible, well, you can just cut out all your wants over here and just pay for your needs. However, if you don't really care that much, then you can combine them together and cover that, and it might take you just a little bit longer to cover that higher cost. In addition, don't forget that when you retire from your W-2 job, you'll need to pay for health insurance, dental insurance, things like that. And so these are expenses you probably don't have now that you will have in retirement. So think about that. What additional expenses will I have in retirement that I don't have now? Now, the second step is determine the amount of passive income you'll need to cover those expenses. Like I said earlier, you don't need a lump sum of money in order to retire early. You just need to cover those expenses we determined in step 1 with passive income. And of course, I'd love to also have a margin on top of those expenses and money set aside to pay for taxes. So let's say your monthly expenses are $2,000, which makes an annual expense of $24,000. Well, I'd like to have a 25% monthly buffer on top of that, making that $2,500 a month. However, you don't necessarily need this. I just like it for safety in case you have emergencies or you want to save some of that money to continue to reinvest in retirement and build that passive income. Well, in Columbus, Ohio, where I live, your effective tax rate on a $2,500 a month budget is 17%-ish, which means your pre-tax income needs to be around $3,100. Now, some of you might be like, well, this won't cover me and my family of 4. Well, this is kind of my estimation for a single man like myself. I don't have a family, I don't have any dependents. So if this number is way too low for you guys, go ahead and ramp it up. This is based off of your expenses that you've determined over the last 3 to 4 months. So just ramp that up, find the marginal tax bracket in your area, and add a buffer that makes you feel comfortable. And figure out your expenses, and this is how you figure out the amount of passive income you'll need to cover those. Finally, step 3 is just to figure out how many rental properties are going to produce that much cash flow and cover those expenses. When it comes to getting started in real estate and building wealth and passive income, there's 2 methods that I really love and that work really well together. The first is house hacking, and the second is the BRRRR method, BRRR method. House hacking is where you buy a 2 to 4 unit property and then you move into one of those units and rent out the others. And that's a really powerful way to get started in real estate because by living in one of the units, you now qualify for owner-occupied financing. Now, owner-occupied financing allows for maybe 5% down. You can go 3% with FHA, but I hate FHA loans, so let's just say 5 conventional. And it's usually substantially lower interest rates than, say, an investment mortgage. This is a great way to get started when you might not have much money yet. Now, of course, you should find a deal that is below market and you can add value to, so you're not super highly leveraged. However, that's a topic for another video. Now, the BRRRR method stands for buy, renovate, rent, and then refinance it. And combined with house hacking, this can be a way for somebody with very little money to get started and build substantial wealth very, very quickly. By adding enough value to a property through doing some cosmetic repairs and finding a property that was below market to begin with, you can then refinance it in a year and pull out some or all of your money that you put into it, making that money then available to put into another property. Now, you can really only house hack once a year because you're required as a primary residence to live in that property for a full year. However, as you build wealth and you refinance properties and more cash becomes available, you can then just buy other properties that you aren't living in and still do the same BRRRR method. And that really increases the speed of your deals as you do your first 1, 2, 3, then maybe you do deal 4 and 5 at the same time or 6 and 7 at the same time, and it really speeds up as you go. Now, I aim for around $200 to $300 in cash flow per unit after I've renovated and refinanced. And I can achieve this in most of my deals. However, this is also contingent on my market and how much value I add to these deals. So check with investors in your local market, maybe real estate agents who specialize in investment property, and see what they say is realistic for your market. Maybe $200 to $300 is sky high or way too low in your market. Also, if I were to buy, say, turnkey properties that somebody else has already renovated, I buy, I step in and I operate, I might only be able to aim for $100 to $150 per month in cash flow because that value has already been taken by the previous owner. So if we need $3,100 per month, like we talked about in the previous step, how many units is that in order to retire? Well, that's around 13 units, maybe 13, 14 units. That is not hard at all to achieve in 10 years. Say you buy between 2 and 4 units, That's between 6 and 3 purchases in 10 years, depending on how many units you buy at a time. Imagine that you buy 3 4-unit properties, house hacking. You put 5% down on each. You can do that over 3 years, and at this budget, retire in 3 years. That's just ridiculous. And sure, you're absolutely not living the life of luxury on this budget, but maybe this opens things up for you to then pursue a passion and make more money doing something else, or continue to reinvest that money and grow that wealth quicker now that you have that $3,100 in passive income coming in. Now, let's say you want to live much better. You want to make $10,000 a month pre-tax to make it easy. Well, you just use the same cash flow numbers. $250 a month would mean you need 40 units. That's like buying 1 4-unit every year for 10 years. Or things are really exponential in real estate, and say you want to make this $10,000 a month in 5 years through real estate. Well, that's 40 units over 5 years. So buy a 4-unit your first year and your second year, an 8-unit your third and fourth, and a 16-unit your 5th year, and you're at 40 units. That's gonna be a lot more difficult, but it's not unrealistic. Run the numbers for your scenario and then hit the ground running. Now, the cool thing is, this isn't even including the principal pay down on the property, which adds another $100 a unit, $200 a unit to your net worth increase, or the appreciation and value add. By buying 40 units and adding value to those, you'll be well over $1 million net worth in addition to making that $10,000 a month in passive income. Now, this will be a lot of work for, say, 5 to 10 years. There's no doubting that. This isn't really passive when you're building, it's setting up systems, managing, adding value. It's gonna be a lot of work. However, personally, I'd much rather work my butt off 5 to 10 years and not be going out to the bars every weekend, not be partying, not be focused on enjoying life, really, to be honest with you, and focus on building wealth and building that passive income stream. And then for the next 30 years, while all of my friends are working, I don't necessarily have to. I will always work, I think. I'll always pursue a passion. However, I don't have to go in. I used to be a computer engineer. I don't need to go into the office and be a computer engineer when I don't like to be one. So that's the cool thing. This opens up freedom. Most of us aren't going to retire, but it opens up freedom to pursue something else. So guys, I hope this shows that there's so much power in real estate, but there's also power in thinking outside the box. So if you just think like everybody else and you need to save up, say, $2 million to retire, you're gonna be working your 40 years unless you're making $200,000-$300,000 a year. However, if you think outside of the box and think, I just need to cover my expenses and go from there, well, that opens up all sorts of possibilities. And I'm not saying real estate's the only way. However, it's a great way for the average Joe like you and I to start building wealth with very little money. I got started with $12,000, I think I had in my bank when I bought my first property, and grow that into something huge and something that can help you retire very, very quickly. So guys, I hope you enjoy this video. I love this type of content personally because it just motivates me. It shows the power of real estate and how any of us can achieve financial freedom relatively quickly. So guys, go ahead and drop this video a like if you would. I love the support. I love seeing you guys enjoying my videos. Go ahead and also subscribe if you're new to the channel. I really appreciate you all here, and I'd love to see you in the next videos. Once again, thank you so much, and I'll see you in the next one, guys.